Hi, this is Anthony with TradingETFs.com. Today is March 5th, 2020, and we wanted to do an update on a few ETFs and also the Dow Jones future contract. What we're noticing is there's a couple different patterns that have developed on these ETFs and consistent with the futures market. You can see here we had the big decline. This is a daily chart. We had the big decline in the last 6 days or so. We had this short-term bottom. We've bounced up and we're moving up, moving down, moving up, moving down, and we're kind of in this inverted flag pattern. And if we took away this post here, you'd have basically a rising wedge within a downtrend, which is pretty bearish. So the second thing we notice is that this Bollinger Band here that has collapsed continues to move down. You can see here on this short-term bottom was way outside the Bollinger Band, so it was a pretty extreme move in price. And so now it hit a bottom and bounced back into the Bollinger Band, and then you can see it bouncing around here. But in the meantime, this Bollinger Band here has continued to the downside. So we could see as early as maybe tomorrow a sharp move down, catching up to this Bollinger Band. The other thing to notice on the chart is our oscillator. This is our long-term oscillator. Despite these big bounces we've had for a couple days in here, our oscillator is still moving to the downside. And so if we do get a move tomorrow that starts to the downside, and it's going to take the oscillator even farther down, we're going to hit, most likely test these lows here, and that'll really determine how bad of shape we're in. We could potentially be entering a bear market, but we just wanted to highlight this on the futures market. Let's move to the SPY ETF, and you're going to see the same exact situation. You've got this inverted flag. You've got the Bollinger Band continuing to move down. You've got our oscillator continuing to move down. The distance between each dot is a measurement of momentum. So you can see here 3 days ago, momentum, or actually yesterday, momentum really didn't accelerate. Even though we had a big day up in the market, it didn't really do very much in terms of a gap from the previous dot. And then you see today we had a big day down, and now the dot's widening again, which would suggest that momentum is starting to increase, but to the downside. So again, you've got this rising wedge in a downtrend. You've got this inverted flag, if you want to call it that, but you've got the Bollinger Band falling, our oscillators falling, and you're going to see that also in the Dow or the Diamond ETF. Same exact situation. You're also seeing it in the QQQ. Now, the one difference here is that our oscillator just today broke down below the zero line, technically giving a sell signal. But the other two ETFs we looked at, notice we're already well below the 200-day moving average. We've bounced up, almost kissed it, and then we bounced down again today. Same thing with the SPY ETF. We broke down below the 200-day moving average. We broke up against it, up above it, and then now we close below it again. The QQQ is still above the 200-day moving average. So if we do start to see an acceleration move to the downside tomorrow, most likely QQQ is going to follow. And I would expect that we'd probably see it fall below the 200-day moving average and catch up to the Diamond ETF and the SPY. Another ETF is the TQQQ, And same exact situation as QQQ, broke down below the zero line, gave us a sell signal. And so we expect that to, if we do have a down day starting tomorrow, then we do expect it to catch up and drop below the 200-day moving average. And the last one is the SMH, which is the semiconductor ETF. You're still seeing the same pattern here. This one did not break down below the 200-day moving average. You've got the Bollinger Band continuing to move to the downside. You've got our oscillator continuing to move to the downside. This previously gave a sell signal back on February 28th. And so all 5 of these, or actually 6 of these, the ETF and the futures market, are all displaying the same pattern. We pretty much already know that the markets have been moving. Bond markets are moving in the same direction, so all the bond-related instruments are moving in the same direction. All of the equity-related instruments are moving in the same direction for the most part. So it's not a surprise that they're all looking the same. But what's going to be a test as to whether or not these patterns here were significant is tomorrow, because if they all break, then that means that we're most likely going to break below these lows, since all of them, what they have in common is the same thing. The oscillator is continuing to move down, the Bollinger Band's continuing to move down, and they all have this kind of rising wedge after a downtrend pattern, which would suggest that we're probably not going to hold these lows. But again, you've got the Fed out there, you've got the administration and Congress are probably working on a plan already to give some type of stimulus. So if we break these lows here, then you'll probably see some type of plan come out. The Fed may even lower again. The futures market is expecting the Fed to lower another 50 basis points in the next week or two, but that may accelerate if the market breaks these lows. So it's definitely going to be interesting to see how the market responds. Right now, the futures market is open. You can see it's up 108 points, but there's really been no volatility yet. There's been no real move yet. So it's either going to break back above and get back into this wedge here, or we're going to move to the downside, and it's going to start, I think it's just going to have a big move to the downside. A big flush is what I see coming. So we just wanted to give an update. If you liked the video, give us a like, subscribe, and this will be also, there's an article that we're posting on our website on trading ETFs, and you'll see on the featured section this video along with an article with the charts. If you have any questions, please let us know either through this YouTube video or through the website under the article. Thanks very much. Have a great day.